So here's another trade I'm in. This is natural gas. Now, people say, well, do you trade currencies or are you a Forex trader? Yeah, I'm mainly a Forex trader, just to let you know. But I do like to dabble in commodities and gold and stock indices. And when the currency markets aren't offering up much to trade off, like they haven't really been on the euro and the pound on the majors, the crosses against the CAD and the yen have been a bit different. But when there's not a lot going on in currencies, and sometimes simultaneously, I have a look at commodities and metals and stock indices. And I'm just going to quickly show you this. This is a really short video. And you will have seen on Twitter and perhaps on my weekly updates, if you remember, and my daily trade reports, that I'm short on natural gas. And there's a whole long story behind why I'm short on natural gas, which I don't want to go into now. But there's my entry price. So these are live trades, just a small position, really. But we got in at 8.36 short on natural gas. And what I wanted to show you was on this chart. This is a 1 hour chart. Now, in the previous video, I showed you a 5-minute chart. If you're going to be swing trading or day trading, as opposed to scalping, it's better to go with the longer term charts. I actually, funny enough, do all my scalping and my swing trading and my positional trading all off day charts. I actually use day charts to scalp with, which is kind of weird because you can't see these precise movements on the day chart, but you can see them on the smaller time frame charts. But you kind of just get a feel for it once you've been trading for a very long time, like I have, something around about 1 million years, something in that region. But what's interesting about this chart is, first of all, on the hour chart, natural gas. This was the move that I sold. Okay, so we had a massive rally up on Thursday at the beginning of August. And it looked like, you know, this is incredibly bullish. For me, this was a very bearish sign. And I'm not going to go into the reasons right now. But let's just have a look at the hour chart to start with. First of all, we've got the 200 period moving average, which we smashed right into. We formed a spike high on the hour chart over there. And that was my entry signal right then and then. And now we're short and we're into the profit somewhat. I expect this, so we're at 8.14 now. I expect this to drop down to somewhere around, I don't know, maybe $3.50 to $4 to $5 dollars. So there's a big opportunity on this trade, and it might bring, I don't know, something like 3, 4, or 5% profit, depending on how this goes. And I'll be monitoring it next week, of course. But what's interesting about this chart, and the reason I bring this up is because we spoke about tweezer tops and tweezer bottoms on the previous video when I was talking about gold. And I said it doesn't happen very often on gold, especially on the daily chart, perhaps more often on the hourly chart. But on this hourly chart, we've got a couple of good examples. And it's also interesting that these candle patterns tend to happen more frequently on commodities and stocks and gold than they do on currencies. And there's a number of reasons for that. But just bear in mind that if you do see these patterns on commodity charts, on gold charts, on stock indices charts, they're often quite reliable and quite interesting, and particularly if they occur at key levels on your chart, which these ones have. Now look at these two tweezer tops. This is really what I wanted to show you. Now a tweezer top is when 2 consecutive candles have precisely, now this software that TradingView works, literally works to the pip, to the T. It's not a pip in this case, but to the penny, let's say. So the high of this candle is precisely at the same level as the high of this bearish following candle. And that's what creates a tweezer top, when 2 candles have closed and the top is exactly the same price. Even better when the subsequent candle, the following candle, is a bearish candle. And in this case, we've got a perfect, well, there are a number of words for it. I just call it a bearish engulfing candle in this case, but there are all sorts of terms for it when the bodies are precisely the same length. This is an incredibly good entry signal around about the 200 period moving average, and you can see we moved down from there. And the same thing happened actually on Thursday. Is it Thursday or Friday? Well, Thursday night, I think. And there we have a perfect tweezer top. right there. You can see this candle and this candle had precisely the same highs. The second candle was a bearish candle, and in fact it was something similar to a dark cloud cover, in the sense that the body of the second candle, the bearish body of the second candle, is about half the length of the bullish body of the preceding candle. And that's called, this is not exactly accurate, but I'm just trying to give you the idea. That's called a dark cloud cover. Nevertheless, the tweezer top is what I'm talking about, and there we have a perfect tweezer top and a beautiful bearish move downwards afterwards. And again, that tweezer top occurred at this previous high, so it makes sense. So it's a previous resistance level where there's a lot of supply, or distribution rather, and we get a move down from there. It's also just around about the 200-hour moving average, and that's where I got in short. Actually, I got in short over here. I'd been short before. I was in short from a long way back. I was short from over here. I got out of that short down here by pure luck, actually, because it was just going nowhere. It had been hanging around for all of this period, not really moving lower, and I thought, well, we've run out a bit of steam. Perhaps we'll get a rally. Perhaps we'll get another opportunity to sell the same idea, same direction, same trade, which is short natural gas down into 3.5 to 5, and we're at 8.5 now. So I just wanted to get out of there and look for another chance to sell, and actually literally a couple of hours later after I got out, which was, well, let's say 4 or 5 hours later, we had this big spike up, right up to that previous resistance level, back up to the 200-hour moving average, and then that was followed by a tweezer top. Perfect opportunity to resell, and that trade is now nice and profitable. If this drops down to, actually I can fiddle around with it now, and let's just, I'll tell you what, if I think this will go down to about, let's just say 5 and be conservative. Okay, so we're at 8.5, well, we started at 8.36. If we go down to 5, so I've just put that in as a theoretical take profit. I'm not going to leave this in as a TP, but just out of interest, this trade will make $168 on this small challenge account, which I'm trading, which is at about $6,200 now. And go and have a look at my challenge account video on this same YouTube channel. I think you'll find it interesting. But so that's around about 2.7 to 2.8% on this trade, which would be absolutely fantastic. And in fact, if we do rally further from here and we don't drop, so I'm not going to leave that TP in, that's just an example. So that's the kind of profit I'm looking at, about 2 to 3% profit on this trade. If we drop down to 4, it'll be $218. And if we drop down to where I think it might eventually end up, 3.5, that'll be $250 on a $6,000 account. Well, that's approaching 4.2% profit, which would be great. But if we do actually not carry on lower from here and we rally up higher, I've got orders in higher up to continue to sell for reasons other than what I'm trying to show you in this video. So I hope you found that useful. This has got nothing to do with the previous 2 videos except for these 2 tweezer tops, which I thought you might find interesting. And if you can get these on, there's a strange person walking past with a dog. You can get these charts from TradingView.com. You can get them free, actually. Do get a few annoying adverts popping up every now and then. And also, you can only have 1 chart per screen, whereas with my $15 a month package, I can have 8 charts on 1 screen, and actually I can have several computers open simultaneously, all with 8 charts each. So generally I look at about 16 different charts on 2 separate computers. And I tend not to have a fancy setup office with computers everywhere and screens everywhere. Not necessary. I've got an Apple and a Windows laptop. The other one's much, this is an Apple Air, the other one's a much bigger one. And on that screen, I can see what you can see here now. So it's absolutely perfect. TradingView, well, the charts, just go get them, they're free, and you can link your trading account to them and trade straight off your charts like I do. So if I wanted to, for example, last thing, sell some more, I just click on this button here, and you saw in the previous video when I sold NASDAQ, Just click on there and I can enter a trade, and boom, straight off the charts. I don't need to go to my trading platform station, and this is linked to my Oanda account on the challenge account. Go and check out the challenge account on this YouTube channel, and please, I'm asking you super nicely now, won't you please subscribe to this channel and like this video and hit the notification bell. I'm going to be making more of these short, educational and interesting videos based on trades that I took live in the market as it was happening. All right.